Shut up and sit down.
Welcome back, everybody, to the Rebel Trading Group podcast. My name is the gluten-free Jason Bessing. What is going on, everybody? My co-host Nathan, unfortunately, unable to be with us today. Busy guy, I get it, but just wanted to put something out there right before the end of the week, so he's going to join us again, hopefully on Tuesday or Wednesday. Today's date is Friday, August 3rd, 2018. It is currently 3:35 p.m. Eastern Standard Time. It is a beautiful, sunny Florida day. I hope everybody is doing well, trading and making the profits. Here at the Rebel Trading Group, we are all about generating income through time-driven strategies and compounding our portfolios accordingly and being smart. We don't just jump into things because they're making money. We analyze each and every trade that we do, and we approach with caution. Are we gambling? Absolutely. Absolutely. But guess what? We are the house. We are the casino. And we get the odds in our favor. Market still has about 25 minutes to the closing bell, so I'm going to go ahead and hit you with the numbers. At the moment, Dow up a strong 134 points, Nasdaq up 5 points, S&P up 12 points. So about 0.5% up on the day. Bitcoin is had a nice day up, and then kind of dipped off literally as I started to gear up to do this podcast, but we're sitting at 7,389 for the day. She was at 7,533 earlier today. A nice tick up all across the board on all cryptocurrencies. Strong days. Don't know what's going on. If you happen to know, have any idea, feel free to message us. You can comment. You can email us at the Rebel Trading Group at gmail.com. It's Rebel Trading Group with 2 G's at gmail.com. Let's go ahead and move over to news, usually hosted by Nathan. Unfortunately, I am going to have to steer the wheels today. It continues to be an earnings season, a strong earnings season. Numbers are coming out. Most of them are better than expected. Apple, of course, continues to be the poster child of this earnings season. Seems to be the breadwinner, the trophy winner, the golden horse, whatever you would like to call it, and keeps continuing to push up the indexes. And I don't know about you guys, but I'm starting to see money move back into value stocks. The dividend payers, the strong cash flows. AT&T back up on the rise, Target back up on the rise, Verizon back up on the rise. I don't know, just kind of wanted to point that out real quick. But other than that, news also continues to be Trump and China continuing raising tariffs another 25%, looking to move forward and doing that, of course. That seems to be built into the prices today, though. Like, if you aren't aware of all the tariff things, this has been going on since April, and you're way behind. This has kind of been pushed into the market already, so unless there's some sort of more drastic tariffs, and it just continues to be a waving of the sword, who's got the bigger dick to wave, I mean, really, this is priced into the market, and it technically, in my opinion, shouldn't even be news. So, So, other than that, not much news coming out. Not much news coming out today. Let's see. Looks to be it for today's news, and nothing much special really going on this week. Just continues to be earnings season. So let's go ahead and move over to today's market terminology. Today's market terminology. What is a stop loss order? A stop loss order is an order that you place underneath the current price of a stock in order to bail out if there is any sort of drop in the market. So here's a perfect example. Let's say your stock, XYZ, is sitting at $10, and you're afraid that if it goes to $9.80, you want out. So what you will do is you put in a stop loss order at $9.80. Therefore, if the stock price drops, it will trigger a market order and get rid of your shares for you. It's a great way to protect your losses, protect your downside. In my opinion, it's also a great way to put discipline on yourself. That way, it's a good way to identify a losing trade. You know, when you hit that stop loss, it's time to bail. It's time to get out, rethink it, reanalyze what's going on, because you can always come back into the trade. Because maybe, let's say you get out at 980, your stop loss hits, and it continues to drop, and you now have the opportunity to get in at $9.40. Well, that's better than just holding it to $9.40. You get to pocket that 40-cent downside. You get to pocket that and save a little bit extra money, making you more money on the upside. So it's a great way to what I call robotically trade. Just puts in your stop loss, you put in your limit order, you put in your target where you want out, you put in your stop loss where you want out if it goes south, and you just let them hit. One will hit eventually, hopefully. And it's a great way to just protect that downside and take the emotion out of the investing. So, once again, that's a stop loss order. If you have any questions, comments, concerns, suggestions, insults, corrections, please email me at rebeltradinggroup@gmail.com. Rebel Trading Group with 2 G's at gmail.com. Real quick, before we get into today's topic, I want to let you know that we are all across the board now. We are moving. We are on StockTwits. That is our new platform. So join us on there. Find us, Rebel Trading Group. We're posting every day some of the things that we're watching. And we are going to begin one of the rooms there that we're going to moderate. So it's going to be a blast. So join us over there. Follow us on StockTwits. You can email us. I gave you the email. I'm not going to say it again. We are on Facebook, Rebel Trading Group Podcast. We are also on SoundCloud and YouTube. SoundCloud will always have our newest 4 episodes available to you. If you'd like a full archive of all of our videos, that will be free to you always on YouTube. So find us. We are out there. So today's topic, I want to talk about the art of the short sell. You like how I phrase that? There is an art to it. So what is a short? A short sell. Shorting is more or less a way to bet against a stock. It is a way to capture profits on the downside movement. If your beloved $10 XYZ stock, you think it's going to go to $9, you will put in a short order, and what that is going to do is that is going to allow you to borrow 100 shares and sell them in the open market right then and there at $10 a share. Your goal is to return those shares because you borrowed them. You borrowed those shares, so you must return them. Your goal is to return them at a lower price. So, let's say you think this XYZ stock is going to move from 10 down to 9. So what you would do is you would sell at the 100 shares at $10 and put that $1,000 in your pocket. Then your goal is to now buy at $9 a share. You will purchase back you will purchase back 100 shares at $9 per share. So for a total of $900, and you will pocket that $100 difference. I know that's a lot to absorb. It kind of moved fast there, but we are going to break it all down for you. So, like I said, you are selling the shares right now, and you're borrowing them. This is done through margin accounts. It's a little complex the way it's done, but more or less you just need to know that you are borrowing them from your broker, and you must return them. You must return them at a lower price than you bought them, or you will not profit. And that's pretty much all there is to it. There are some risks associated with this that are not associated with just buying and hoping that the stock goes up. For example, if you purchase the $10 stock, the that you can risk is $10. If the stock declares bankruptcy the next day and your stock goes from $10 to $0, you lost $10. If you short a stock at $10 a share and it goes to $100, well, you just lost a lot of money because you now have to return those $10 shares. You now have to return 100 of them at $100 a share. So there's an infinite amount of upside risk when you short sell. And there is a limited amount of upside profit. So unlimited risk, limited profit. It's vice versa when you're buying a stock. When you buy a stock, it's limited risk, unlimited profit, potentially. So that is the art of the short selling. Why would someone short sell? Like I said, it is a perfect way to play against market volatility. It is a perfect way to play against a massive sell-off. If you are good at trying to time the market or picking out horrible companies, shorting can be extremely lucrative if you can see beyond what others cannot see. I shorted a telecommunications company. I'm going to go ahead and say it, FTR. This was a while ago, so it doesn't really count anymore. Let's call it the Jason Bessick statute of limitations has run out on that. I shorted Frontier Communications at $12 a share, and it dropped all the way down to $8, and I bought my way out of it. So I pocketed that $4 difference all the way down. I know that the company has just terrible earnings and terrible cash flows, and they just lost money. So I bought a put option to play against one of their earnings announcements, and just made money doing it. So it is a great way to play against those bad companies. Also, more stocks go down than they do up. I forgot the exact number. I think it's 1 out of every 7 companies that goes public will not go bankrupt. That means every 6 out of 7 will eventually delist within 5 years, because they're mostly horrible companies that can't cut it in the big world. They had a lot of growth and saw the opportunity, did their IPO, and then couldn't maintain the size of the company. So if you can identify those losers and you have a little bit of patience, you can short those companies. Eventually they will go bankrupt and you will profit from it. Another reason somebody might short is because they might do it for insurance on some of their holdings. So if you own 100 shares of let's just say you own 100 shares of the Nasdaq, ticker symbol QQQ. If you own 100 shares of that, and you are afraid that technology stocks are going to stumble because of whatever reason, you think that there's going to be a big sell-off in technology, well, you might be able to short 25 or 50 shares of your NASDAQ position, and that will give you some exposure to both upside potential and downside potential at the same exact time, and it's a way to insure your holdings. It's a way to give exposure to both profit and loss. And a short should never be a long-term hold. So when you do that, it should never be for more than, I would say, several weeks. Because remember, you have to return those shares, and you don't want the market to run up on you and really hurt you because of what was supposed to be just a small bet to protect yourself, and you don't want to have to turn that into a huge loss. So how can you practice shorting before you jump into it? Because, like I said, there are extra risks, but it does give you a lot more potential. One way that you can do it is through an Investopedia simulator. If you go to investopedia.com, I'm going to put that in the show notes, investopedia.com, they have a stock simulator that's very, very good. I've used it to play with a few times, and it's you can short almost in real time. You can buy and short, I think, on like a fake $500,000 account, and it really gives you the feel of how it all works. It gives you some exposure to the terminology, such as when you do a short sell order, you are selling to open the position. And when you get out, you are buying to close the position, because you're getting in, that's opening it, getting out, you're closing. So it's kind of backwards, rather than you're buying it, and then when you sell it, you close it, you're out. It's the opposite. So it really re-gears your way of thinking. It makes you kind of think upside down. And it takes practice, it takes time, it takes work, it takes some discipline, but once you are able to think in both capacities, it's a very great tool to put on your little trading utility belt there. Batman had one, but his had a bat on it. Mine has a bull. Another great way that you can practice shorting, if you don't have the time to quote-unquote paper trade or do a stock simulator, you can try to do an short selling inverse ETFs. I wouldn't start with inverse leverages, but an inverse ETF shorts the market. So the ETF itself, let's go ahead and use SH as an example. SH acts opposite to the SPY. SH is an inverse S&P 500 fund. So if the S&P 500 or SPY goes up 1% in a day, SH will go down 1% in a day, and vice versa. If S&P is down 3%, SH will be up 3%. It's a perfect short to the index. So what you can do is you can short sell these inverse ETFs, because that'll give you exposure to the market going up, but because you're short selling a downward moving thing, you are going to make profit. Inverse ETFs always go down, 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 split, down, 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 reverse split, down, 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 reverse split. So that's probably your two best ways to practice it. Another easy way that you can, it's not necessarily short selling, but a way to gain some extra exposure to playing downside, which, by the way, we have an episode on it called Playing the Downside, and we go over several ways that you can do that. I basically have covered them once again in this episode, but went more in depth with one of the methods, which is short sell orders. Another way that you can do it is through put options. If you are familiar with options and how they work, a put option will allow you to sell stock at a specific price in the future if you so desire. So if you have your stock at $10 and you think it's going to go to $9, you might buy a contract to be able to sell your shares at the $10 3 months from now if it drops below. So I'm not going to go too much into that. I'm going to save that for other episodes. It's something that we go over every now and then, but we're going to just kind of really jump into it one day, the calls and the puts. A lot of people ask about how to get into options, so that will come up soon. That's something I'm definitely going to have to do with Nathan. That's not something I'm about to sit here and do all by myself. So that's pretty much it. If you have any questions, comments, concerns, suggestions, insults, or corrections, please email us at rebeltradinggroup@gmail.com. Rebel Trading Group with 2 G's at gmail.com. I'm going to go ahead and close it out here. Let's see. What am I watching for the week? I am going to watch the Walt Disney Company. We all knew who they are. It's the Walt Disney Company. I'm not going to sit here and explain the House of Mouse to you. They are jumping into earnings next week, and I'm just really curious how they are going to do, because they have been pretty bad in the past few earnings seasons. They haven't done well. They've done very subpar performances. So that is starting to, looks like that's starting to decrease, and hopefully they are starting to improve. I do have a little bit of exposure to them. I think that they are starting to shave off some of their more, or shall I say, less profitable areas of ESPN, and I can see that they continue to grow. in the film industry, entertainment industry, in the theme park resort industry, cruise ships. They're just doing great. They're just a great, well-run business. They've struggled the past few years because of the... Oh, man. Oh, that's yucky. Anyway, so I just see them growing. They've struggled to grow in the past few years, but I think that they're going to be a good play. So I really want to see what they do on Tuesday when they release earnings, August 7th. So they have taken an 8% increase in the past month, and I always say Wall Street knows something before earnings. They always know something before we know. So I hate to say it, that's just the way that the game works. It's a sad reality, but whatever. We can use that to our advantage. We can make money ourselves. So I am actually going to sit here and wait before I cut the transmission here, because the market is going to close in 1 minute. I want to get you the final numbers, so hang on tight. We'll be right there. Real quick, I just do want to share, MGM did continue to sell off. We did talk about her in the last podcast that she was the one I was watching for earnings. She did continue to sell off a little bit, so looking to maybe pick up some more there. I do see her as a long-term hold. Also got into MGM Growth Properties, ticker symbol MGP. They are the real estate investment trust that owns and operates the land in which MGM operates the casinos. So looking into those, they did sell off. I think we've kind of seen a little bit of a bounce up, a little bit of support, a little bit of a floor in for now. So watch those as well. All right, ding, ding, ding. Final numbers. Here we go. Let me go ahead and pull up the good old E-Trade. Final numbers, we have the Dow Jones Industrial Average closing at 125 points up, NASDAQ up 5 points, S&P up 12 points. So basically the same thing as what I said earlier. I love you guys. Thanks for listening. Like us, subscribe us. We are on YouTube, SoundCloud, Facebook, StockTwits, Rebel Trading Group. Just search us, you'll find us. I love you guys. Happy trading. Crypto traders, gear up for the weekend. Here we go. Markets don't close. Love you guys. And to quote the ever so wonderful Nathan Oliphant, is it Monday yet?
Shut up and sit down.